following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
Welcome back, everyone, for those of you who came back. Yesterday we had a panel of institutional users from the buy side. And right now, we're having a panel on retail, what's trending in the retail marketplace. Please welcome Christopher Larkin, our moderator, Todd Lard from Schwab, Brian Overby from TradeKing, Gary Sjostedt from TD Ameritrade, and Frank Tirado from E-Trade Financial. Thanks, guys.
Good morning, everybody. Welcome to the What's Trending in Retail panel, which will be the best panel, of course, of the conference. We got a fantastic agenda, a lot of good questions, and I want to introduce the panelists today. Close to my left, we've got Gary Sjostedt from TD Ameritrade. And for those of you who don't know Gary, he's the Director of Order Routing Strategy and Relationship Management at TD Ameritrade. His team's responsible for ensuring best execution for the client base, developing and implementing strategies pertaining to order routing, and managing and enhancing the day-to-day relationships of the company's market centers, partners within the industry. Next to Gary, we've got Todd Lard. Todd Lard is Vice President of Trading Operations at Charles Schwab. He's responsible for order routing, execution quality, regulatory trade reporting, and market structure issues for both equities and options trading. Right next to Todd, we've got Brian Overby. And Brian Overby is the Senior Options Analyst for TradeKing. He's a widely sought-after resource for his options trading knowledge and his market insights. And he's contributed numerous articles for the Wall Street Journal, Reuters, Bloomberg, and has had frequent appearances on CNBC, Fast Money, and Fox Business News. And then finally, on the far left, we've got Frank Tirado. Frank is a member of E-Trade's team. He's the Senior Manager of derivatives marketing for E-Trade. And prior to that, Frank spent 17 years at the CBOE and held positions in domestic and international business development, marketing, the Options Institute, and regulatory services. So we've got a nice diverse panel up here today. So yesterday when Andy spoke, he talked a little bit about the industry volumes, what's going on out there, just the broad industry, and how we've seen tremendous growth over the past 10 years. But the past 2 years, we've seen the volumes compress. Last year, we saw volumes drop by 12%. And then this year, we started out with a strong month of January. Volumes were up 8%. It looked like we were going to come into a really good year, but yet February, March, we saw the volumes drop back down again, and we're now down about 3%. We're down in volumes this year. So I think the big question here is what's happening. I want to speak to Gary first because you're the largest order sending firm in the panel up here today. But what's happening in retail? Is their volumes dropping? Is it dropping more than the industry, or are you seeing different behavior from the retail investor?
Thanks, Chris. Actually, we're seeing different behavior, especially in the options arena. In equities, volumes are down, but on options, we're actually up 6% versus the last 2 fiscal quarters of our year. And for the past 12 months, we've actually had 80,000 new clients trade their first option. So we're seeing quite a different scenario.
Okay, and we'll get to that and talk a little bit more about why you're seeing that type of behavior. Hey, Brian, you're at a boutique option firm, but you're heavily conscious, obviously, in the options market. Are you seeing similar behavior from what TD Ameritrade is seeing, or something different?
Yeah, about 40% of our clients actually trade options. And what we've seen is a huge drop-off. And it's kind of weird. It was more so not even 2008 that hurt us as much. It was more the flash crash. After that, we saw volumes drop off quite a bit. And if we look on a per-account basis, we actually went from almost 40 trades a year per account that we had down to almost 19. So we have definitely felt the crunch as far as the options are concerned. We do get more and more option traders coming in and day out through the education, and our main goal is to try to take people that have a lot of free cash and try to educate them and get them into option trading, make them a more profitable and a more astute investor. But we've definitely seen the volumes drop off, and I think what's amazing to me is that the flash crash was scarier to our clientele, than what happened in 2008.
And you've seen that both when you talk about the drop-off. Have you seen it where is it more the equity side, or is the option side outperforming like you see it in the industry?
Overall, it's kind of been a little bit of both. Not as much, more so when I look at the equity volume versus our option volume did drop off a little bit right after the flash crash, and we went down to where about 30% of our volume was options. Now it has started to come back, and now we're back to levels like around 40% of our total volume every day, day in and day out, is options.
Right. And Frank, at E-Trade, I think if I've seen it, the percentage of option trades at E-Trade seems to be growing overall. Is it the growth in the base, or are you seeing it that the equity volume is dropping overall, which is resulting in your mix going a little bit higher?
No, that's right, Chris. Our options trading continues to grow within our customer base, and I think what I've seen over the last few years is that the interest of options trading among the retail investor is just consistently of interest. So we have, when you think of E-Trade, you got to think of a spectrum of investors. So on one side, you might have an individual using a leap option as a stock substitute. You may have an individual using a covered right on a 30, 60, 90-day basis. Then you have individuals trading weeklies actively, very actively. So within that spectrum, we have some diversity within our customer base, and therefore you see that percentage of option trades becoming more and more of our overall trading. So it's been good for us. Volumes this year, though, reflect what's happening in the industry so far, but we're optimistic that the demand is still there for our customers.
And Todd, have you seen anything is it consistent with what these guys are seeing on volume? Have you seen something different? You just acquired Options Express, obviously, relatively recently, and that's put you guys into the mix in the options side. It was a very strategic investment and whatnot. Have you seen something not only within the Schwab base, but also within the Options Express base that might differ?
Yeah, so it's similar to what Frank was saying in terms of, obviously with the two broker dealers, we do have a very diverse customer set now. Year over year, volumes were slightly down. We do see an increased number of clients that are wanting to trade or approved for trading options. So that's been a positive, but the overall volumes, even with the two brokers, are following industry trends right now.
And Frank, so how has the behavior of the individual investors changed over the past 5, 10, 15, 20 years when it comes down to options? I mean, you've been involved in educating investors for so long, but has there been a behavior change that you've seen over the years?
That's interesting. I worked for the Options Institute before E-Trade, and one of the things that I see today is just the interest in options has not slowed down among retail investors. And so you have 20-somethings, 30-somethings, as a new generation of traders wanting to learn what options have to offer. But what's different is they want to learn it in their context, in their world. So what that really means is that, in fact, I'll just share a story that I shared with some former colleagues from the CBOE on Wednesday. And my son had his 21st birthday last year. So I thought, what better way to celebrate it to talk about trading? And, hey, son, let's teach you the basics of trading and so on. And his response, in the blink of an eye, he said, where's the controller and what are the levels? And so that, to me, gave me an idea of what new traders are wanting to do, where they're thinking, where they're emerging from. That is very different from what we have today. And so within that context, we need to find out where the new traders are coming from, how they're thinking, where they're engaging, where do they want to be taught options and how. And so that's one of the things that we at E-Trade continually try to do, and we'll kind of press forward on that.
And Brian, what strategies are people using in today's markets right now? I think options, when they first were introduced, it was a lot of speculation that was going on. I think the product has evolved a lot by the hard work, I think, from the firms and from the OIC in terms of educating customers to become better investors. What are people doing today in this low environment? The rates are low. What are they using options for right now?
Well, And I would say probably over the last 5 years, the option trading by our retail client has become much more complex. I mean, I never even heard the term skip strike butterfly, 8 years ago. And we're actually teaching that strategy, and we're actually seeing our clients doing these more advanced strategies. Now, there's always the old standard, sell a put to buy the stock, get the stock, sell the call against it. We have a pretty big RIA firm that teaches that nonstop, that trades through us. And we actually push some people that way because we like that conservative strategy. It gets the clients to the goals that they need.
To add to that, Chris, when you look at, again, the spectrum of customers that we have, and you see the types of products that they have at their disposal, the amount of creativity is just phenomenal. So you have, leaps, you have weeklies, you have monthly, quarterlies, et cetera, index options. And so what we're seeing among our customers, again, within this spectrum is a level of simplicity. The covered call individual that is used to 30, 60-day now option is now being introduced with a weekly option and a new way to kind of ignite that strategy. And then with more complex trading. And so the level of how individuals are learning and the speed at which they're learning has kind of accelerated that pattern of basic to more advanced strategies. So we're seeing a lot more spread strategies, 2, 3, and 4-legged spreads as well.
Yeah, I think a lot has to do with the fact the cost of education has came down. Yeah. And a lot of brokers are realizing that we're not in the education business, or we're not in the execution business only. We're actually in the education business too. So with the advent of webinars and electronic videos, I mean, it's so much easier to get the word out and to teach these complex option trades and strategies overall.
Well, and follow up on that, I think what the exchanges have done with Complex too has helped in terms of having auctions, price improvement mechanisms. The execution quality is at the highest levels we've seen. So I think that plays into it as well. So you have these new participants coming in, and then they get good execution quality by trading this other strategy. So I think that's it goes hand in hand.
Yeah, I tend to agree also. We are the largest education arm, and we do see our clients take advantage of it. For instance, when minis were launched, our first webinar for minis, we attracted over 3,000 participants. So people are engaged. More of the complex strategies, covered calls obviously are the biggest ones, but 37% of our option dots are complex.
Right. Mm-hmm. See, I mean, and the interesting thing here is that, I mean, we're starting to shift some gears here. We're talking about new products right now. I think that you've heard a lot about the weeklies. Even Andy brought the fact that he sees that as a growth part of the market in years to come. We've certainly seen the success from the retail side that's out there. Gary, maybe you can let me know, number one, is that, what are you seeing in volumes on the weekly side? And then, do you guys see that this is incremental growth to the product, or do you think this is cannibalization of existing, people just trading, going to the weeklies from the monthlies?
We're seeing tremendous growth in the weeklies. 26% of our option dots are now weeklies. That's great. It's fantastic growth. The rotating weeklies seem to be a backdoor into the dailies. We do see clients take advantage of them. It's grown. It's really taken off.
And it's Todd from are you seeing the same? But also, when it comes down to this, is it bringing new the products like the weeklies bring new customers, or is it just is this a product that they're looking for, or is it just the existing customers that are just doing something different?
Similar experience to what Gary mentioned. Depending on at Option Express, for example, it's 25% of the trading activity. So it's within weekly. So it kind of depends to what Frank has said about the gamut of the client base. RIAs are clearly not in that space, but it's really more at the individual investor level. But in terms of the actual growth, we've seen approximately about a 15% incremental increase in just the trading just from the weeklies. So it wasn't pure cannibalization from the monthlies.
So we also learned over this conference, I know it was introduced just before, but rolling weeklies. I mean, is the retail sector, are they supportive of rolling weeklies? Is this something that your customers are asking for, or is this just a product that the exchange is just trying to get out there to somehow get that daily concept out there that's been batted around for the last few years?
To go back to the weeklies question too, we've seen a tremendous growth in that franchise for us as well. The beauty of weeklies for our customers, and you have to imagine, just an average Joe who's used to doing his cover right on a 30, 60, 90-day method. And so he's introduced to this weekly method, and immediately the ROI in his mind is ignited. Therefore, he or she is trading more based on that ability to generate more income. And that value proposition in context of what's happening here from an economic point of view with low interest rates is the message for an individual who needs to generate income. On the rolling weeklies, we're kind of neutral on that position right now. We want to take a look at that. We want to protect our current weekly order flow, and we don't know how that will affect our customers from a fragmentation point of view. Will our volume fragment into 5 different parts? Things like that, as well as the confusion, the possible confusion to our customers. I just am trying to imagine an option chain that has not only the standard options, but the weeklies, et cetera. So those are the things that we have to take a look at. In fact, what we'll probably do is, obviously listen to the exchanges and what they have to offer and any data that they have that will show that this will grow the franchise, but also survey our customers to see if this is something they want.
Rolling, I'd like to hear everybody's thoughts on the rolling weeklies. Is it added value, or do you think this is going to create more confusion?
Well, it's added value. Clients seem to like it, especially around earnings announcements and whatnot. They can really take advantage of the strategies that weeklies do supply.
Customers love gamma, basically. So yeah, I think that they will succeed. I'm kind of actually, when we're talking about the minis, or which I'm sure we're going to mention at some point in time, I was kind of surprised to see that they're actually thriving. I didn't expect that as much, but I do think that the rolling weeklies are definitely going to be a product that, especially around earnings, around news, it gives you that ability to have that explosive option contract that the people like to trade. So yeah, I can see it being a good, and that is an issue with the data. I almost think we're in the wrong business. I'd rather be in the quote provider business than the brokerage industry, the way it's going with all the different quotes with the minis, and I can't wait till Apple splits. That's going to be interesting.
Well, we have 2 product managers here and they're just excited about the possibility of 252 expirations. So.
And I think, and this will kind of go into the idea of the thoughts on dailies, and if you're supportive of something like dailies. I know that, I'm not sure I have to ask you, Brian, because I think Tom Montanaro has been quoted as saying he's up for the hourly options that
He did that. Can't wait till hourlies come.
So I don't need to ask you if you're supportive of dailies. Are you, Gary, I think you've been quoting us before, but are you supportive of dailies?
We're supportive of new products if they're right for the retail client. With the dailies, it does pose some back office issues and problems that would have to be worked out, 3-day settlement, so on. But we'll see. The rolling weeklies seem to almost take care of that.
But won't rolling weeklies have this? Will that? Are you worried about it from the rolling weeklies perspective? You're now having expirations every day now.
I don't think it's cannibalization either. I don't think we're concerned on that. We're just seeing the growth of the regular weeklies. I think that would just continue to accelerate.
Right. And Todd, are you worried about the handling it from an operational standpoint? You think about rolling weeklies or dailies? Is that how does that outweigh the other stuff?
From the operational side, I think the changes that the OCC are making this summer in terms of going to the Friday night expiration is part of that process. We had to do a lot of work, prepared for this. Heard about the product coming out, so conceptually said, all right, we're going to have a daily expiration. So we went ahead and built those processes out as we were expanding for the Friday night process. So it's not as much that. I'm more in the camp with Frank around the client confusion. So if it's education, and I'm in agreement with Gary too. I mean, new products, if they're right for retail, are great. And you do have the play with the rolling weeklies or around the earnings, but yeah, at some point, is it information overload, and is it too much for the client, and is it confusion? I mean, we'll talk about minis in a second, but we're seeing a little bit of that on the mini side as well.
Well, and there's also an issue with risk. That's one of the bigger things that a lot of firms got to think about is you're having an option that's going to expire every single day, and a lot of retail clients buy call options and don't think about it, and they come to expiration, and all of a sudden they got 100 shares of IBM in their account that they didn't expect. So that does weigh a burden on our service desk to make sure that these people close out these options. They're going to have to do it every single day. So if there's as far as us as a firm is concerned, I'm not as worried about getting the chains right. Technology will figure that all out. But it is a concern when you're dealing with retail clients and they're buying long options, long puts, long calls, and have that auto exercise that happens to them, and they just fall asleep on it.
Chris, to add to that, if there's one thing I've learned in 20 plus years in this business is that confused customers don't trade. And so one thing that we want to see, and maybe perhaps through a survey of our own customers, is to make sure that, our current weekly franchise and our current weekly volume is not disrupted. And, I don't want some good customer who is not a professional customer to look at a quote screen and say, this may not be for me anymore. And so we have to be careful as we proceed. But, it sounds like an opportunity. I'm actually taking Mr. O'Neill's advice by just taking a breath, taking a step back, and thinking about this before we look at it further.
I do want to talk about mini options, and obviously it's just come out here. What are you seeing in terms of volume in the mini options? And I'd be interested in hearing, Gary, you mentioned the number of people that joined the web seminar, 3,000. That's impressive. Once again, is that bringing new customers into the option arena now that they've got this new product they could trade on, on the odd lots?
Yeah. We are seeing some growth, albeit it's been a little slow. But the growth is coming primarily from the more experienced investor. However, having said that, we are seeing clients who have not traded the underlying in the past now trading the underlying for the first time along with the mini. So we are seeing some new growth that way too, new interest. Mm-hmm. And it's all within the education too. We do a great job with the webinars, a lot of interest, and hopefully that will catch on. And we do see a lot of the odd lots with the minis, which is what they're designed to be.
Are you all charging standard commissions for the mini options right now?
Yeah.
Does anybody see that as a barrier to the potential growth of the product, or is it not an issue right now?
Well, inside our community, our trader network, we have a lot of social networking built into our platform, and a lot of people have complained about that. As a matter of fact, what our customers are saying inside our community is the concept of the jumbo makes more sense to them than the mini, because they'd rather have a $12 stock that, they can buy a 1,000 share lot on and buy that option contract and save commission costs. But our commission costs are the same. We're not self-clearing. We're clearing through someone else, and they charge us the same rate on a mini option. So obviously we got to charge our clients that too.
What about the ORF? You saw they came out with the same rate on the ORF for the mini products. Do you believe that there should be cut by some fraction of what they are right now? I don't want to get to the ORF conversation, but is there, are you working with the exchanges to potentially have them reduce that fee in order to make the product more successful?
I think it remains to be seen.
As far as the ORF is what the ORF is. They're going to regulate it. They're going to charge it. They're trying to change the tax code. They're going to continue to do it, and it's a part of the business. So we just pass it on to our clients. So that's unfortunate, but if they continue to raise those rates, then it just makes it more expensive for the retail client at the end.
It's a tax to the end user, to the end retail client.
Yep.
Right. The ORF is a tax.
So we've always passed it on.
But on the other hand of the situation, right, it is part of the system to maintain its integrity, right? The regulatory bodies need to do what they need to do. And looking at the list, it looks like just the efficiency in the structure can be attained. And the previous panel, I think, made a good point about perhaps having a central location like the OCC facilitating that and then distributing it in that way.
Speaking of taxes, I know that yesterday we spent a little time on this transaction tax. I think it's important to get the viewpoints of the actual retail firms on what the impact of something like the CAMP proposal could have on not just the overall industry, but also just from an experience standpoint, from a retail investor. How do you think this thing What's your viewpoints from a firm standpoint on this tax?
It could potentially be devastating. It definitely would lead to investor confusion, which is what we all want to mitigate. When it comes to tax time, to try to figure that out, I would not want to be a retail investor.
Yeah, so I think, Ed brought up a really good point yesterday in terms of the way it was proposed, this broad brush of us being derivatives in the listed markets. So I think there's a little bit of confusion as to that from the bill perspective. I know that Gary and Frank as well, we had Schwab, Ameritrade, and E-Trade were on the Hill last week and talking to staffers and really trying to provide a idea of what the impact or who they're impacting on this, that it's not the high-end, high-wealth client that is doing these strategies. It is true retail. Gave them a profile of that client, and there seemed to be some eyebrows raised as part of that process in terms of not really having the understanding of the impact, as well as following up on Gary's point around just the pure confusion from a client's perspective in terms of marking to market. And there is a lot of education, but you would almost that's a whole separate level of education on tax issues, which typically we don't provide.
So I guess buying Leaps as a stock substitute looks a lot more interesting. So I'll call against it.
Sorry, go ahead.
But as far as that's concerned, I was going to bring a little point that we'd mentioned in the green room. I actually used to lecture to the IRS, and I've gone out and done lectures to them and trained them and their instructors. And at this point in time, with the code the way it is, I actually had one IRS agent stand up and raise his hand and say, basically, there's no way that the customers could ever figure this out and we could ever audit them unless they keep copious records. So basically, right now they're saying that they can't even track it. So it's going to be crazy if we get to that level.
Yeah, I think us as an industry and individual firms really need to comment on this and try to nip it in the bud and stamp it out. I think the more we're vocal about it and get ourselves in front of the regulators very important.
I think it was a very important comment on this issue.
Yeah, E-Trade was part of the delegation that was in Washington last week, and what the briefing I got from Dan was that he was surprised that these representatives were actually paying attention, which was really good news. And they were shocked at the fact that this really hit home to Main Street. And I think what it did in their minds, it just lit a light bulb that this may not be best for the public interest in this context. And it's just such a strange way to raise revenues, right? It's just a proposal to try to raise revenue to disrupt an entire business. And basically, the way I see the legislation, proposed legislation being, it's like taking all of my customers, all of several hundred thousands of option customers, and putting them in a time machine and taking them back to a place before 1973. They're not able to protect their stock position. They're not able to generate income. And so that can be pretty harmful to a person now seeking yield, seeking income, to be in that situation, to not being able to generate income or protect their nest egg.
What I'd like to see basically from the industry on this is, I know a lot of the big players are obviously out doing some talking to the representatives, but actually know what we can do as a community, all the brokers involved. Like, who should we be talking to? I would like to try to get more grassroots effort behind this so that firms like us can also support this. Who should we be calling? Who should we be sending letters to? Everything that's involved, because this is a major issue that could be very detrimental to our industry.
Yeah, I think that I think the firms here, from an industry standpoint, obviously they do it as well. But you're always looking to protect the retail investors out there in every way possible, whether it's through taxes or market structure or things like that. Mm-hmm. One thing that came to mind from my standpoint is that over about 2 years ago, the regulatory bodies came down on leverage ETFs, which became a very popular product at the firms. I think this was a good example of where the retail investors were investing in a product. It was lucrative for the retail firms, but it was not a very good product for the customer long term. So they put some regulations around it, some more disclosures, and that volume we've seen gone down quite a bit since that time, which customers got to understand the product a little bit more. I think the real question, though, is on there are options on leveraged ETFs. Do customers really understand options on leveraged ETFs? And do you think that the regulatory body should be approving products like this?
Well, I don't understand them, so I don't know how our clients do. I mean, they're very confusing, and I think the regulatory bodies have stepped up to the plate and actually kind of said that there are a lot of warnings. You know, ideally, if somebody enters a leveraged ETF on our site, they get a warning saying, hey, by the way, realize what this product is before you hit the send button. But things like, even on top of it, like the TVIX, that index, just I don't get it, and the fact that they have options on it is scary overall, to be honest.
It all plays around, once again, the education around it. And we do see business in leveraged ETFs. We do see it more with the experienced investor. They do trade them, and they also trade them in and out the way these products were designed.
And that's the main thing. They should be trading them in and out. It's not a long-term hold, because they're just the math that's behind it and the way that they function. It's more an in and out. And that's what we hope to see the clients do, but we don't always see that. You know, they're going to day trade them, day trade them.
And another thing that switch a little bit gears there is that, you know, I think we talk a little bit about high frequency trading. Are you guys concerned about high frequency trading entering into the options market? It's got I think when we talk about this particular subject, the perception is really bad in high frequency trading. I don't think that anybody can get around that part. And I think there's some education. I think there's probably some benefits, and there's probably some negative things when it comes down to it. But are you worried about that entering in the markets and the potential experience for retail customers?
Well, high-frequency trading overall isn't necessarily, I guess, we never did really figure out what the flash crash was. But that's a great example, because we saw our volumes just die almost instantly the next month after the flash crash. It really hurt our business overall, and we're all retail clients. So high-frequency trading overall, I think, scares retail clients, and it's just the concept of it overall. Obviously, anytime somebody's stepping in front of some other order and taking that order and making a profit with basically no risk, I can't understand why that's allowed in the marketplace. Why should people have that ability just because their computer is a supercomputer? So overall, not a big fan, but I think it scares our clients, and that concept of a flash crash, again, definitely hurts our business.
So let's switch gears now to the growth of the product. And I think that's what everybody's interested in from our side. The industry is celebrating 40 years this month, as we all know. What does the industry need to do to have another successful 40 years in options? Frank?
You know, when I look back at just my career and just the experiences that I had and seeing the business grow, it's pretty fascinating that we have 11 options exchanges. But one of the things that I would like to see is the continual investment in product development. And one of the things that I reflect on is, if you look at what Main Street as well as average investors had to deal with over the last 5-7 years, and you think about the exchange's response to those issues, yeah, we have a solution for your portfolio, which is wonderful, protective puts and other type of hedging strategies. But when you look at an average individual, they were hit, their portfolios, their homes, their careers, their incomes. And I think there's just a lot of opportunity for exchanges to re-engage the retail community. And, you hear different statistics regarding the percent of volume that is attributed to retail. And, from what I hear, it's still significant, 30-40% of the business. And so I think that innovation that really sparked the industry with a solution to risk is what I think we should go back to, but in a broader context, in a bigger context.
And potential growth down the road may not be in the form of new products per se, but we're hearing client demand for another offering after hours trading, especially around earnings announcements and whatnot. Mm-hmm. Have clients who would like to trade further along in the day.
Yeah, after hours. And so Todd, you've got, obviously you've acquired Options Express, but is it still a low percentage of your customers that are enabled to even trade options at this point in time?
No, again, we run the gamut, and I think one of the opportunities for growth, and I was saying, Brian mentioned earlier about the RIA business. So the RIA business is one area, and I know they were talking yesterday or mentioning about, kind of a more of an institutional side, and they were talking about the fund companies, but we see more and more clients, retail clients that want to have managed money, so they're utilizing the RIA business is fairly large at multiple firms up here, and I think that is an opportunity for growth, and that's really about education. So it's not just the end client is retail, but I think there's a whole other level of education that the industry could maybe target at that particular group as well.
Yeah, we went after free cash balances, and actually offered up free education courses on options, and it was very profitable for us overall. Once we get somebody into that class and they do have some free cash and they learn, and we usually teach the simple strategies like covered call writing, cash secure put selling, and overall we've seen all those accounts we've tracked, and we've seen the commissions and the account overall basically triple per month in the trading that they do. So offering up that education at affordable price, if not free, is the one way that we're really that we're growing our business, mainly with option traders, targeting people that have free cash balances that are earning, less than 1% right now.
Chris, and that's another good point about the next 40 years. I mean, when you look at what the industry has done and really facilitated the OIC and all the work that it's done, the way we see it from the retail side, education is really the oil in this machine, because when I reflect about where we're at as a customer, I always remind myself of the simple fact that more people don't trade options than do. And when we look at that simple fact and think about what the OIC is doing and what it's done over the last few years, it's pretty phenomenal. And I believe there's a correlation between learning how to protect your portfolio or generating income, having the right education taught in the right way. But I think the challenge, as I mentioned before, I reflect looking at my son. How does the new generation want to be taught? And is it video? Is it gaming? Is it the gamification of education is already happening? So there's a lot of different factors that the next 40 years are going to really be challenging, not only the industry but the OIC as well. But so far, that's got to be an integral part for the growth of the business.
Where is maybe Brian, I know you're focused on the option stuff, obviously with TradeKing. What are some new things that you're going to bring out to the customers this year? What are you focusing on? I mean, I heard yesterday as well from Andy that spread trading seems to be exploding in terms of volumes more than the actual traditional market and whatnot. Are you doing things to enhance the experience from a spread perspective? Where are you guys investing your money?
Right, and well, I guess I kind of reiterated that a little bit, because we have targeted people with large cash balances, because there's a lot of the numbers that I threw out earlier. We used to have, when we started the firm 8 years ago, our clients used to trade about 40 times a year. Now it's all the way down to about 19, so it's cut in half. And we've quadrupled the number of accounts, but we're doing almost the same amount of trades, a little bit more. But when you look at that, we're trying to get the education piece in front of them. We're doing webinars, we're doing market calls during the day, trying to give trade ideas, trying to educate, because we want the client to be around too, and an educated client has a tendency to stick around. The attrition rate is much lower if we can get them into our education funnel. So spread trading is one of the things that we emphasize, without a doubt. I actually in my playbook call it the fig leaf strategy, because you're kind of covered, but it's where you buy an in the money long call and sell an out of money near term call. We teach that quite a bit as an alternative to just doing the covered call. And if this tax thing goes through, you can see that could be a big benefit. I mean, the way to do it. But that actually came from our community. They actually termed that strategy the fig leaf, because nobody knew what to call it.
Yeah, I think everybody's got some pretty mobile trading applications right now. And I think there's been a lot of investment on that side. You've seen tremendous growth in terms of number of people looking at things. Are people trading options on mobile devices now, or is that an area that you're investing in, or is it something that people traditionally just do on a platform?
8% of our 8% of our option dots are mobile.
I'm sorry, how many percent?
8%.
8%.
We're seeing over 220,000 new client trades per week, mobiles. I believe we're still the only firm out there that offers weeklies, minis, and complex to be able to be traded on mobile. we see a great growth potential.
And Brian, you're obviously a very large presence in the social media perspective of things. Why is that an important venue for you to get your message out from an education standpoint? Is that something that you've seen growing as well?
Yes, and we went through a strong learning curve on the social media. A lot of times you're worried because you're putting yourself out there and it's so public and they can say whatever they want. And you're all worried, oh, this is negative, and trying to deal with it. And then you also have the compliance issue where everything that we type or write has to go and be approved. So every word has to be read by a compliance officer before it gets posted. But what we've learned is you just have to address it. Clients love, the thing that they love the most is if they do vent because there was an issue, and somebody actually comes back with a response and says, this is why this happened, or an apology or whatever. We've noticed that we even have our own people in the community, big players that trade a lot, are policing, doing our jobs for us. As a matter of fact, they'll come back to a lot of people and say, well, obviously, the outage, Chicago Board Option Exchange had one yesterday. People complain about it, but coming back and addressing it and telling why and saying this is an issue. And we've seen our own customers that are big fans of our firm go back and actually address other customers and do our job for us. So it's a big part of our business, and it was a lot to implement it because of the compliance issues that are involved.
Well, so the bad news is that the volumes are down, but the good news is it sounds like the retail investor seems to be outperforming the overall industry, which I think is very positive. I think the last question I have before I'll go out to the audience is, what do you think brings retail back? I mean, how do you get them to go from 20 to 40? Is it new? Is this going to be new functionality? Is it new products? Is it more education? What are you guys going to? What are you doing to get these customers to come back and get more confidence in the markets?
I think one simple step is the mini option complex. I think is a great idea because you're looking at a portion of the community that's been excluded. And so now you're inviting them in to engage in option strategies like never before, and I think that's a good step in the right direction. We waited to launch minis because we wanted the customer experience to, in fact, they're launched today, to be consistent, and so we're excited about that because of the fact that we have a lot of customers that have odd lots in those listings, and so we're hoping to see the growth that's been happening so far.
We did see a few of our customers be first-time Apple traders because of the minis. As a matter of fact, since the mini launched, we were ready to go on day one. It's been about 1% of our volume, which I was kind of surprised to see. And it's totally different than the volume that the exchanges are seeing. The exchanges are seeing, I'm not going to get it exactly right, but about 50,000 contracts a day, and about 30,000 of that is the SPYs. And very surprised. I have no idea why anybody would ever trade a mini SPY. It doesn't make any sense to me at all. And at the money option's $1.25, 30 days out. So why do you need a mini option? But they're trading them, and I almost wonder if that's institutional people coming in and seeing pricing issues or whatever. But I really expected Apple and Google to lead the way in the minis. But yeah, so we had to go with Frank's words there. We've had a few people for the first time trade Apple options. Never have before.
We have a similar experience. I mean, Apple is about 50% of our mini volume. So
it is ours too.
Yeah.
So on the retail side, we're seeing the Apple and the Google, which makes sense to me. Right. But on the overall side, for some reason, the SPYs are leading the way.
Yeah, seeing the same.
Another thought, just, when times are tough, I think sometimes the tendency is to kind of pull back and kind of push forward this thinking of austerity. We know it doesn't work. It hasn't worked in Europe. And I think when we're looking at things that are maybe slowing down, I think the education front really, through the OIC and other mechanisms, should be really invested in. I think that's a key factor, especially within the retail world. And so if we can get an individual that now owns 90 shares of Apple to learn about a covered right, there you are. You have a potential trading career, a potential revenue stream, et cetera. So those are some of the things that will strengthen the system.
All right, we got a couple minutes. I don't know. I'll see if we can get a couple of questions. I think that I've asked that if you could stand up so someone can find you for a microphone, that'd be helpful. So
with that being said, I'm going to take I was able to throw this out in the green room. but I see Tom Brady walking up here, and I'm going to make a proposal right now. If we decide to have jumbo options, I think in honor of Tom Brady, we should call them bigs instead. So I just want to throw that out there. Figured now was a good time.
I know we've got I don't know if you have a microphone, but there's somebody who's got a question.
What is the best forum to educate customers on new products? Is it online webinar, or is it in person, old school?
That's a good question. What we've seen is a split, and age matters. And so guys like me, I love being in a room. I can focus for more than 140 characters in 10 minutes. So, on the one hand, I think the live education is still significant for a significant part of the population. However, when you're trying to reach younger traders who are more interested, by the way, in options, in margin trading, in more complex trading, because again, you have this new generation of thinkers that have been, are used to the internet, are used to gaming, are used to thinking in a multivariable way. Online is the key. Just to share some numbers from our perspective, we have increased the amount of video, online education, online classes, and we track it. For last year, for the first time, we exceeded over 1 million views of our educational content, and that includes not only the live individuals in seats, but also our video online classes and everything we have. And so I think you have to kind of split it and have a nice diversity in what you're offering.
So, go ahead. I was just going to, a different spin on that, and it's not really the end client, but on new products in general. And one thing that I want to commend the exchange is the ones that have created the retail advisory committees. I think that's a great opportunity before you're putting out a product to get some input from firms like us. So I want to commend the exchanges that have done that, and if you haven't, then I would encourage that you do.
All right, well, I know we're up on time here. I want to thank our panelists today. If you want to find them afterwards to ask questions, I believe they're going to be at the blackjack tables in about 20 minutes. So you can go grab them there. Thanks, everybody.
Good job, guys.
Good job. Great job, guys. Awesome. Very good.
Thank you.
The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.